Hello and welcome. You're watching KYC. I'm Hersh Sayta. With me is my Jani, and today we're going to dissect Bikaji Foods. Of course, the numbers, but outside of that, there's plenty of things happening with regard to this large player within the packaged food segment. Let me first start off with volumes. Well, volume growth in core markets is, of course, on a high base, not as strong, but you want to do well in the non-core. So the core markets, which is typically West India and Rajasthan in particular to start with, and now the non-core, as Mahima tells me, is UP, Haryana and the like, more of central India. Volume growth, well, you want to see how much are they targeting and what's the traction they're getting with regard to their non-core markets, whether they're able to build that same brand, that same rapport with the customer or not is really the question. Second one is competition and the impact of that on the growth number. Of course, within core markets, but more so in non-core markets, competition remains strong in a segment like this. Is the receptiveness of products in other states also just as good? How quickly can we evaluate that? What kind of timeline should one look at and what kind of performance should one look for is really the other question we'll try to understand. The fourth piece is probably the most important, and that's raw materials. One, in terms of direction. Second, in terms of pass-through. Price increases don't seem to be something that the company is very enthusiastic about, at least basis commentary. It seems like a low single-digit kind of price increase. Everything's going to largely be driven by volumes, but the cost pass-through will be the question. How much of the cost increase is going to happen? How much of that is going to get passed through? How confident of a 32% gross margin, that's the guidance that they've given, and a 15% EBITDA margin in FY26. How confident are they of that? 32.5 to be absolutely precise, but I'll give it to them if they are able to do that 15% EBITDA margin nonetheless. Acquisitions, what's the thought process and what's the growth prospect with regard to already made acquisitions, and how do they view new acquisitions and new places where they are making investments? There aren't too many large capex projects that they are undertaking, at least in the near term. That's not the announcement. But broadly, acquisitions will be one thing which I have my eye on. Anything else, Mahima, that you feel that we should add?
The interesting part here would be to try and understand as to how they're doing, what they're doing in terms of its international expansion, considering now the UK FTA is in place. That is something to watch out for, because a lot of these competitors of Bikaji Foods, like something like an ADF Foods, is doing the ready-to-eat part of business. So we'd have to see as to what new products also they are trying to foray into. But, before we go on to the 8 metrics that we're going to talk about, let's take a quick look as to what the company does exactly. It's probably one of the largest companies in India in the listed space that is into ethnic snacks as well as Western snacks. The product mix per se for the company, ethnic snacks is almost 75% of their overall business. Packaged is almost 6 to 7 odd percent. Western snacks is still small in terms of percentage, but a very fast growing business for them, around 9%. Papad is around 6% and others is around 3 odd percent. So that's with regards to where the product mix stands. Market wise mix, as Hersh mentioned, the markets are divided between core and focus. The core market is around 72.4%, focus market is 13 odd percent. Others comprises of around 9 odd percent, and exports right now is almost 5% of the total business. The core markets include your Rajasthan, Assam and Bihar. Focus markets is your Uttar Pradesh, Haryana, Punjab, Delhi, Northern India, and in the southern parts they are focusing on Karnataka and Telangana. In terms of its international presence, the company has presence in over 30 plus countries, but the revenue contribution right now is restricted at 5% mark. In terms of the SKU mix, family packs contribute to around 57% of the total business, and impulse pack is around 40.6 or 41% odd there. So that's with regards to the mix in terms of SKU. The network, there are around 3,26,000 plus outlets that the company has, and store counts right now are around 15 in the core plus focus markets. In terms of the overall capacity for the company, Bhujia has around 57,600 metric ton of capacity, Namkeen with 1,41,000 metric ton, packet sweets around 62,000, Western snacks at 39,300, papad with around 11,400 metric ton capacity, and that sums up to overall capacity of 3,25,000 tons. So that's that's the overall view of, in fact, the whole and soul of Bikaji Foods that one needs to know about.
Okay, so that's how we're looking at the company. Let's look at the key metrics now, and in terms of, okay, so those are some segments as well. Mahima, you want to cull that out?
Sure. So in terms of the overall segments, you know, ethnic snacks, this is of course as to where the Q1 FY26 numbers stand. Ethnic snacks grew around 11%, packet sweets grew around 3%, western snacks grew around 4%, and papad grew around 5.8%. So growth has been faster in terms of where the papad segment stands. This quarter, western snacks has slightly seen, you know, a lesser growth as compared to where it was in earlier quarters in double digits per se. So that's one question that we need to you know, ask the management as well. In terms of the core markets performance, that grew around 8.5%, focus markets grew 11.5%, other markets grew around 26.5%. We need to know as to what these other markets are that, you know, that's growing faster in, even better than the focus markets as well. And exports grew almost 61%, though a very small chunk, but has seen a significant amount of growth. So an outlook there also, you know, is something that you know, the management needs to answer. All right, so that's with regards to where the overall segmental and core market and focus market performance stands.
Yeah, but you know, if we can pull out that core versus focus in terms of revenue mix, when you're looking at that, somewhere you're starting to build in a risk that the focus market, or rather the core market, is a very heavily reliant market for Bikaji Foods. Around 72% of the top line comes from there.
Correct.
Let's pull up the mix, actually, the revenue mix in about the company. So 72.5% comes from there. And these are, of course, your core markets. Outside of that, when you're looking at focus, it's a much smaller pie. So focus markets is as you correctly mentioned, is just around 13%. The others is what is 9%, which has contributed substantially in terms of growth, at least this quarter.
Correct.
So again, something we should try and understand as to what's playing out and how quickly does this mix change, how quickly does this wheel that we're seeing change, because the focus on the core is just so large.
Correct.
It creates a large risk for the company. So that's the other piece I'd want to know. So, but let's go across. Let's understand the key metrics where Bikaji Foods is concerned. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, the street cred, valuations, and street coverage. So we'll cover all 8. I'll allow Mahima to, as usual, take the lead with regard to income statement.
Right. So income statement overall, you know, it's a thumbs up because it's been a good growth for the company in the past 3 odd years. If you take a look at the overall revenue CAGR, that's been around 18%. The overall EBITDA CAGR has also been around that 33% mark, and net profits have shown a growth of 37%. Margin trajectory overall, where it stood in FY22, that's improved to around 13%, but the margins have taken a hit as compared to where they were in FY24 at 17% to around 13% in FY25. But this is largely because of the kind of inflation that the entire edible oil space has seen. So raw material inflation is something that is impacting the margins overall. So margin trajectory has been slightly on a negative note when it comes to comparison with FY24. But overall, from an FY22 perspective, it's been a good growth. In terms of where the Q1 numbers stand, revenue growth at 14%, EBITDA growth at 5%, margins from that 16% mark to 14.7% mark, and net profit up 3%. Volume growth has been good this quarter for Bikaji, so that was something you know, which stood out for me, which was at 7.5 odd percent, and this is because Q4 was not very you know, good for the company, but this quarter they've done well in terms of the volume growth. So that's with regards to, you know, where Hersh, the overall you know, income statement picture stands. So it's a good growth in terms of where the 3-year performance has been. So it's a thumbs up.
Just the one concern possibly is what you correctly pointed out.
Margins.
FY24 to FY25, the margins have fallen. FY24, the profit after tax number was 265 crore. FY25, it's come to below 200 crore. So that contraction in profit after tax is not looking good. It's obviously a concern. How much will it bounce back, and what will that inch up be? Will we exceed FY24 levels? What's your sense?
I mean, it will all depend on, you know, overall how this raw material prices impact plays out, first thing. Secondly, you know, as I was mentioning earlier also, there has been a duty cut in edible oils. So that will probably play a positive role and have a better impact on PAT overall. But the other factor is that ad
sorry,
spends...
when will that translate? Will that translate
That will
Q2?
transfer from Q2 itself. Start translating from Q2 itself, because they might have some inventory in place already.
Sure.
The third aspect is, I think they are also going big on ad spends. So that is something that is also overall impacting your, you know, bottom line numbers. So we'll have to see as to how the trajectory of ad spends also go, because they've been onboarding, you know, a good, you know, a lot of personalities on board to keep their advertising spends going up, plus social media marketing also is on the card. So that is something that might impact the profitability. But overall, I think considering the duty cut and inflation slowing down is going to be positive for the company.
Point taken. Let's switch over to the balance sheet. Again, not looking bad. Mind you, the company has a market capitalization of around 20,000 crore. You look at the equity plus the reserves, you're looking at a even sub 1500 crore kind of book value. The borrowing number, of course, looking fairly okay from book value standpoint, even more so comfortable from a market cap standpoint. And when you're looking at the cash and bank balances, also there is enough comfort available. Clear thumbs up where the balance sheet is concerned. Cash flow, Mahima.
So cash flow overall, you know, cash flow from operations have slightly slid when you compare it to FY24 numbers. But it's been, you know, in the same range at where it was in FY23 per se. But in terms of the cash flow to the overall EBITDA percentage, that has come down, you know, from that 80% mark in FY23 to almost 59%. So that is something, you know, which is on the negative side of things. And taking a conservative approach there, we've given it a neutral rating here. Net cash flow from operation overall at 7 crores in FY25, although that has also slid quite significantly from that FY23 number. So that is also a bit of concerning part, and that is why we've given it a neutral rating for now.
Yeah, inventory as well as some amount of build-up over there, working capital build-up. That's contributing to that slightly tepid cash flow number versus the EBITDA. My guess is that's just the nature of the business as well, something to keep in mind. Return ratios, let's quickly look at those. And fairly healthy, but fluctuating. So that's something you want to keep in mind. The return ratio was is in the late teens broadly. 1 year of blip or so, but broadly it's in the late teens. We've given this a thumbs up as well. Shareholding, Mahima.
Right, so pretty well held company, you know. It's there is skin in the game. Promoters holding almost 75% of the total company. FIs have increased their stake over a period of time from the 30% mark to 7% in FY25. DIs have also steadily increased their stake in the counter from 10% to 12%. Public shareholding, however, has come down from the 10% mark to around 5% mark. But number of shareholders overall has gone up from that 83,000 mark to almost 1,44,000 mark. And of course, this is in terms of where the in thousands number. But overall, it's a well-held company. DI steadily increasing their stake. FIs increasing their stake, almost doubled in the past 3 odd years. So we've given it a thumbs up when it comes to the shareholding pattern.
Okay, let's look at street cred therefore. And when you're looking at the last 1 year or so, it's been largely range bound. We've given that a neutral, but the last 3 years since listing, it's done fairly well for itself, 2.5x in terms of shareholder returns, so very strong. And therefore, kind of nullifying each other over the longer term, it's done fairly well for itself. We've given this a neutral. But valuations.
Right, so valuations, what we've done here is we've compared it to the likes of Gopal Snacks as well as ADF Foods, which are the like-for-like competitors for Bikaji Foods. And in terms of the overall valuations, 1 year forward 26 plus 2 year forward 27, both look expensive when compared to peers. Gopal Snacks trading nearly half at where Bikaji is trading at. Similarly, ADF Foods trading much below than where overall Bikaji Foods is trading at. So valuations look expensive. Plus the 5-year average PE for Bikaji Foods has been around 41 times. So the forward valuations are looking much more expensive as compared to the 5-year average PE as well. So we've given it a thumbs down when it comes to the valuations part of the business.
Well, you have to consider that. Let's look at analyst recommendations now. 7 buy calls, no holds, no sells. Return potential though just 4%. That's reflecting with the kind of valuation that it's getting. So of course, largely looking priced in terms of the 12-month performance. We've given this one a neutral as well, since there is so much conviction, but just not enough upside there. So we've left it at that. Let's bring on board the management. Manoj Verma, CEO, Bikaji Foods, and Rishabh Jain, CFO, Bikaji Foods, joining us. Mr. Verma, let me start with you. Let me try and understand the outlook with regard to raw material costs and pricing. One, how much is it going to improve starting Q2? What's the visibility now looking like with regard to raw material costs? Second, how confident are you of that 32.5% kind of gross margin and 15% kind of EBITDA margin? What's the sense? Give us that perspective.
Thank you, Hersh. So, for doing such a great analysis, I've seen the analysis for the last 10 minutes. So, you've done a great job.
Thank you.
So, from margin perspective, you see, last 2 years, so we listed in November 22, and in third quarter of last year, due to edible oil increase, tax rate increase by government during peak festivity, edible prices increased to a substantial level. It is close to 60-70% rise in quarter 3. So our EBITDA and gross margin impacted in quarter 3. But you've seen last 2 quarters, we again turn around the company. And overall margin from gross margin after EBITDA has been, this quarter has been the highest in last 6-7 quarters. So from that lens, we are very much confident that that 32% is sustainable for us in this year. And from EBITDA lens, we are close to 14.5-15%, very much sustainable. So we are confident about the same.
Hi, Mahima also joining in. Always a pleasure speaking with you. Just want to get your sense on the trajectory of the raw material pricing that Hersh was talking about. There's positives that has come in. The custom duty impact of 10 from that 20% to 10% mark, that should positively aid your margins. Just want to get a sense there. And there's also easing of inflation when it comes to the palm oil prices. What is your sense? Where do you think the margins will go at? Let's say by the end of FY26 or FY27, give us a range of where you're seeing the margins to be like.
So in last 6 months, we've seen good cool off in prices of each raw material, like all pulses and all. Of course, in edible oil also, we've seen good reduction in prices after import duty reduction. So we see that our gross margin EBITDA will be in the range of 30-33%. Gross margin after EBITDA will be in the range of 15% at the year end. That's what we see. We will also majorly focus on volume growth and overall top line growth and fund the growth. That's what our major focus is. So our EBITDA target is around 15% in the year. That's about it.
Mr. Verma, let me come to you with regard to growth. 72% of your top line comes from the core market. How much of a shift in strategy has played out in terms of focusing on the focused markets, and what about other markets? Because that one has just grown extremely well, at least in this quarter. Give us what's happened, what's the outlook, and what is the medium-term trajectory you see in terms of top-line breakup?
Yeah, so our focus states is grown ahead of the core states, right? And that's what was part of our strategy. Talking about other states, so while we call them as other states, but by no ways are they under focus states for us. The only change, the only difference in the strategy of go-to-market is that in those states, we drive through modern trade, new age, e-com, and the other channels, basically. So that's where is the trading model, and which is doing very well. Modern trade is doing extremely well for us. And those are the states where modern trade, say, like, let's say a state like Maharashtra, Gujarat, which are very high on modern trade stuff. And we have by far higher share in those states. So by virtue of these channels, we are doing extremely well. Also, the bases are relatively low, so therefore these growth looks better in that state.
Okay, so I take your point, and therefore how should, sir, the mix evolve? Because currently the reliance on your core is very, very large. You've always intended to shift away from the core. How quickly does that happen? Give us that perspective.
So, Harsh, one is I would want to correct that it was never shifting from core to focus, because these are our most profitable states too, right? So they will continue to be our core and our utmost focus for us. But yes, from strategy and in terms of our route to market, coverage, reach, and all. So let me share some numbers with you. So in these core states, we are available in upwards of 800,000 outlets, just 3 states, right? Whereas when we talk about focus states, our presence is about 275,000 outlets. That's where we are in these 6 states. And the rest of other states, in all put together, is about 150,000 outlets. So the drive, what we are doing in terms of increasing our reach, availability, that's what is part of our strategy and the go-to-market phase, what we do.
Interesting. Rishabh, in terms of your international business, what is the kind of strategy in place that you have? It's been a growing business for you, although 5% of revenues right now. Because there are a lot of opportunities out there. There's UK FTA that's in favor of India. Plus, your competitors are already going into that ready-to-eat segment and going big when it comes to exporting, overall. There's Tasty Bites, ADF Foods, all of them doing that. Do you also want to go ahead and, foray into that segment? One question. And international business expansion, what are the plans looking like?
So we are also very much focused on growing export market, and we see great potential in growing this because you will see last year we acquired one company named Ariba. They are mainly into frozen, ready to eat, ready to cook, and we also had set up one plant in Bikaji that's frozen sweets. So we see great potential in export. Frozen part is a big category, and we see great potential in growing this, and you will see the numbers in this year also.
Verma, does growth rebound sharply for you, and how much of the cost pass-through goes through this year? Give us that perspective. Give us the knock-on effect on margin. So top-line growth, margin, what should those numbers be for FY26?
So from top-line lens, we have targeted close to 15 to 16% growth from top-line lens. That's what our major focus is. With volume of 10, 11%, upper to 10%, that's a target we are taking. And from EBITDA lens, of course, overall 15% EBITDA, that's a target we are taking, and we are on track of achieving the same.
Okay, Mr. Verma, a quick question on competition. How is it looking like? It's not just, the organized space, it's also the unorganized space in the snacking segment that could probably impact. And plus, there is healthy snacks, which is picked up so much. Just want to get your sense there. Is there market shares that are, that are being pared away? Is that anything that you've observed there?
Yeah, so talking about unorganized, for this category, unorganized sector plays a big role. And even today, if we look at, it's about 40% of this stationery business is still unorganized. So they will definitely have a role to play. But more importantly, what we have seen is that in last few quarters, the local and regional players, or more importantly, local players have emerged and they've done well. So that's where the challenge is. And we as a company, large player, so we have to fight both, the top leaders and also the small players there. So that's the shift what we have seen. So rupees 5 price point has done very well, in terms of category if we look at.
Rishabh, give our viewers maybe a 3-year lens into what we can expect from a Bikaji in terms of performance. You've given us FY26. Give us the 3-year picture, because in no way, from a valuation standpoint, does the stock trade cheap. And I'm not alluding to the fact that there is no potential, but I'm trying to understand from you what the 3-year runway is so that investors who are already invested in Bikaji or looking to can see that, can have that visibility. What's that number looking like?
So we have just completed our capex cycles. Currently, we are at close to 50% utilization. So our major focus is to drive growth and volume growth. That's a major focus. So we see that at least we should grow at least 15-16% year on year for next 3-4 years. That's a target.
And maintaining that 15% kind of margin on all of that growth.
Of course, yes.
Got it. Mr. Verma, Rishabh, it's been a pleasure. Thank you so much for joining us this morning and giving us all of that to take home with us. But that's all the time we have on KYC. Before we wind up, let's quickly look at and stack up the ratings for Bikaji Foods. In terms of the start, 4 parameters were really robust. They were solid, good performance, cash flow. I want to quickly mark out, we've given it a neutral, but largely par for the course. That's just the way the business is done. And overall, you get a 5.5 on 8. Valuations were a thumbs down. That's something you want to look out for. 5.5 on 8 on the KYC ratings on a Bikaji Foods. From Mahima, myself, everyone who puts the show together, thanks so much for watching. Stay with us on NDTV Profit.